Aloha, my name is Kevin Kimball, and the purpose of this video is to help you learn how to set up a brand new company in QuickBooks Premier Accountant Edition 2009. Prior to watching this video, you should have watched the Accounting for a Simple Company video in which I describe the setting up of a brand new company for Spencer Kimball, who is trying to save money for his mission. Hopefully you've already watched that, because then you will understand what transactions are going to be recorded in this company and what type of business this is, so that you can properly answer the questions in the setup video. In order to begin, you will need to go down to the Start menu and click on QuickBooks Premier Accountant Edition. Now when mine opens, it sometimes will open up the prior company that I was using. Now in this case it didn't do that because I had already exited out of that company and had gone to the new company screen. But if your screen does not open looking like this, you would just need to go up to the File, New Company screen, and it would come up like this. So if you can get to that point, just click on File, New Company, and this Easy Step Interview screen will open up for you. In this case, we do want to use the Easy Step Interview, which is available right here. Now if you were bringing in data from a prior software, such as Quicken, Peachtree, or Office Accounting, you would want to use the Convert Data feature. If you feel that you understand QuickBooks well enough that you don't need to go through the Easy Step Interview, you can skip Interview and do all the settings on your own. In this case, we'll use the Start Interview. In prior versions, this was called the Easy Step Interview, not just the Start Interview. So we'll click on Start Interview. The company name will be the name of the company that we are creating. In this case, we'll call it Hawaii Straw Hat Company. And for my purposes, I will call it Final Video. I'm just going to do that for my own purposes so I can come back and find this. The legal name will be the same because this particular company is a partnership. Now if it were a sole proprietorship, the legal name could be Spencer Kimball, and his tax ID would be his own personal Social Security number. However, in this case, because it is a partnership, we would use the partnership tax ID. Since this company is fictitious, I do not have one to input at this time. You could enter the street address. Let's say it's 2255-220 Kulanui Street, which is the address on our campus here. The city is Laie, the state is Hawaii, and the zip code is 96762. We could put in phone numbers and email addresses. We could go ahead and put in the www.byh.edu website for our campus, and also put in the email address. But since this is just fictitious, I don't want to spend a lot of time having you input data here. So let's choose Next. As you recall from the videos, you'll recall that Spencer will be purchasing finished straw hats from China and will be selling them to residents of the United States or tourists who might come through Hawaii. Therefore, we will need to scan down and find the industry that best matches Spencer's business. He is a retail shop or online commerce. The reason you want to choose the correct industry is due to the fact that when you choose this industry, QuickBooks will create accounts that match the type of industry that you're in. And so there's some accounts that Spencer will have that a hairdresser or a hair salon wouldn't have, or a manufacturing company wouldn't have, or a dental company wouldn't have, and vice versa. So you want to choose the one that best matches your company. Now if you don't find a perfect match, go ahead and choose the closest, and then you can modify by removing charts of accounts in the chart of accounts, or by adding later on. Choose Next. How is your company organized? If you recall the video you already watched, you'll recall that Spencer is a partnership with his dad, and therefore they will be filling out Form 1065. If he were a sole proprietorship, he would choose Form 1040. If you were a limited liability company, he would choose this below. So you just choose the one that best matches your business and choose Next. Spencer chooses to run his business on a January to December basis. That is his fiscal year, which also happens to match his calendar year. It happens to match the actual calendar year. Now in the Southern Hemisphere, many businesses tend to run their businesses on a fiscal year that go from July 1st to June 30th. If that were the case, you would change your fiscal year to start July. But that's not the case for Spencer, so we will click back to January and choose Next. If this were a real company, you might choose to put an administrator password in so that you can control what access certain users have. In this case, I prefer that you not put in a password so that when I review your file, I will not have to remember your password or find it out from you. Choose Next. At this point, we will click on Next to create the company file, and this will be creating our charts of account, things like that. Now you'll notice that I already have a few Hawaii Straw Hat Company files created, but as you've noticed, I've changed the name. But you want to browse to wherever you want to save your file. In my case, I'm saving it under this QuickBooks Transaction Tutorials folder, and this will be the name, and I choose Save. It'll take a few seconds to create the new company file, and you just need to be patient as it does the background work on this. I will pause while it works through that. And so after working through that, it did save me a minute or so here, or a few seconds in the interview. But let's move on. This is what should appear. Now you've got your various menu items up at the top, and we are still in the Easy Step interview. Now we will customize QuickBooks for your business. Choose Next. What do you sell? Spencer only chooses to sell a finished product, and therefore he's not selling services such as gym memberships or hairstyling services. He's not doing that. It's only products, and it's certainly not a combination of services and products. So we will choose Products Only and choose Next. How will you enter your sales in QuickBooks? Now you could record each sale individually, which is what Spencer plans to do. As a customer comes in, he will make a sale and he'll record that as it is sold. Now some businesses, they choose to record only a summary of their daily or weekly sales. So they have a cash register where they record sales in the cash register, and at the end of the day say, well, how much were our sales? And that total amount would then get input into QuickBooks. Spencer doesn't choose to do that. For every customer, he will record a sales invoice in QuickBooks. And we're not using the QuickBooks point of sale system, and therefore will not choose that. So we will record each sale individually and choose Next. Do you sell products online? Spencer does not sell products online, and he's not interested in doing so. Now, if he were interested someday to do that, we could click on this one up above. I don't sell online, but maybe someday I want to. Whenever it's one of these options, like maybe someday I'll want to, all that means is that QuickBooks will add the functionality now, and as you do start to sell online, you would start to use it. Otherwise, the functionality just kind of is available, but you don't use it, and it's kind of dormant. We'll choose Next. Do you charge sales tax? Yes, Spencer does charge sales tax, so choose Yes. Do you want to create estimates in QuickBooks? QuickBooks can allow you to create estimates for your customers. For example, if you were a contractor and they said, well, how much will it cost to put up a wall 30 feet long, 5 feet tall, a cinder block, you could then create an estimate in QuickBooks, which is then is used as you deal with your customer. But Spencer just buys straw hats and sells them, and so we would leave this as no. As you can see, that's what's recommended for his business, and we choose Next. Tracking customer orders. Do you want to track sales orders before you invoice your customers? In other words, will customers call up and say, hey, I need 100 hats next week or 3 weeks from now? Then you would enter a sales order, and then you would order the goods to fill that order, and then as the goods come in, you receive them and you would sell them. Now for Spencer, since he might be doing online, maybe we will allow sales orders, but to be honest, most of Spencer's sales will be done in his shop, but just for fun, we'll leave it as yes for right now and choose next. Using sales receipts in QuickBooks. You want to use a sales receipt when your customers pay in full at the time of sale. This is especially common in retail businesses. However, in Spencer's case, he actually plans on making a sale and having his customers pay later. So we'll choose, we'll allow it to have a cash sale. So we'll say yes here, but just recall that we will make some sales and have people pay later. So we will go ahead and accept the recommended for your business yes here, which will allow him to make cash sales, but will also allow him to make sales on account. So we'll choose next now. Using statements. Statements would be used if you you bill, and then at the end of the month you send a statement to the customers. You make a sale to the same customer, and at the end of the month you make a statement billing to them. That's not going to be the case for Spencer. As soon as he makes a sale, he will send them an invoice for that sale, or he'll give them the invoice by hand. So in this case, we're not going to be sending statements out. That'd be like maybe your electric company might choose to send a statement system. Choose next. Do we want to do progress invoicing? Progress invoicing would be, let's say someone came in and asked you to build them a ship, and the ship is going to take you 2 years to build. You might want to invoice them on a percentage of completion basis. As you finish 10%, you bill them 10% of the sales price. That's not going to be the case for Spencer. He has finished goods and he sells finished goods. So this is not recommended for our business, and choose next. How are we going to manage the bills that we owe? Do we want to keep track of bills you owe? For example, if we buy some product from our supplier in China, they send it to us, we receive it, and we pay later, then we might want to keep track of these bills, and so that on a weekly basis we might want to see how much in bills we have outstanding and pay those that are coming due. So we want to choose yes here to keep track of our bills. Do we want to print checks? What this means is, do we want to be able to push a button in QuickBooks and have the check print out on our printer? Since Spencer is kind of a low-tech business, Spencer's business is kind of low-tech, we will just have him writing out checks by hand in his checkbook, and then he will enter those checks into QuickBooks. So he doesn't currently print checks, and he doesn't really plan to do that. But if you did plan on doing that, you would want to choose one of these top two options. Let's choose next. Tracking inventory. Since we know Spencer will be purchasing these hats and having them sit on the shelf and then sell at a later date, and he does want to keep a pretty good handle on those hats, we will say yes that he does want to track inventory in QuickBooks. We'll choose next. Do you accept credit cards? Spencer doesn't currently accept credit cards, and he doesn't plan to. We'll choose next. This is a cash business, so either cash or checks. Choose next. Spencer does not have any reason to track time in business in his QuickBooks because it's just him or his father who will be working. It's a small shop operation, so we'll choose no here because we won't be billing customers based on the work that we completed for them. We don't do job costing where we allocate our time to the given product that we're producing, and so we're going to choose next. Do we have employees? Spencer does not have employees, so we'll say no. Do we have multiple currencies involved? Although Spencer's supplier is from China, Spencer will be billed in dollars and pay in dollars. So whenever he receives that bill from China, he asks that they do denominate all bills in dollars, and he will pay in dollars, and therefore we'll choose no. Now if he had chosen yes, he would have to designate what his reporting currency or his home currency is, and there he would note dollars, and QuickBooks would enable him to convert, say, Chinese yuan into dollars at specific times. But that's not the case for Spencer, so choose next. Using accounts in QuickBooks. So QuickBooks sets up a chart of accounts, so as you record transactions you need to indicate what accounts those transactions relate to. Is it inventory? Is it cash? Is it rent expense? Whatever. And so when we set up and chose a retail company as Spencer's line of business, QuickBooks already created a chart of accounts for him. But then we'll review those automatically created chart of accounts and determine which ones we want to keep and which ones we don't, and which ones we still need to add. Moving on, we need to select a date to start tracking our finances. We're going to choose the beginning of this fiscal year, which is 1109. Actually, in our tutorial, if you recall, we actually were running in 2011. So I'm going to change this to 1/1/2011, so that the dates in my setup video here will match the transaction tutorials. We'll choose next. Would you like to add an existing bank account? Spencer will have a checking account into which he's deposited the funds from himself and from his dad, and so we do have an existing bank account, and we will call this LIE International Bank, or LIB. We could put in the bank account number and the bank routing number if we knew those, but since it's fictitious we have not come up with those. But these pieces of information are helpful in ensuring that you know which account you're dealing with, especially if you have multiple accounts. And also when you're sending money, wire transferring, you need to know, or receiving money, you need to indicate what your account number and routing number is. When did this bank account open? We'll say it opened on or after 1111, which is when we received the funds from Spencer, and choose next. This is just telling us that since the bank accounts were opened after the start date, they're going to be opened with a zero opening balance, which makes sense because they didn't have balances on 1/1. Only the cash came in only after, when Spencer and his dad made the contributions. Choose next. Do you want to add another bank account? No, we only have one, so we choose next. Now we're going to review the accounts that were set up automatically for us. We have merchandise sales, sales discounts. You can just skim through here and just ensure that these are set up properly. We might want to give people a purchase discount. Maybe if they pay within a certain time frame, we'll give them a discount, so we could choose purchase discounts. We can keep scanning through here, see if there's any others that we should include. I see interest expense, and I do see interest income here, but it wasn't checked. So since we will have money in an account that, let's say it is interest bearing, maybe we have a special checking account that does bear interest, we want to choose interest income here. Other taxes, we might want to be aware of sales tax. Let's see if we have a sales tax up here. We might choose to add that at a later date. So let's leave that out right now. And it looks like we have accounts that'll work for us. We have interest income, interest expense. We will be using those as we incur interest on our loan. Maybe not in this video, but just in business. And interest income on the funds that we've earned. So we can choose next. And congratulations, you've completed the easy step interview. And we can finish. At this stage, what it's doing is it's creating the company accounts, and we can go up here and close this QuickBooks Coach. If you wanted to watch a tutorial, which is pretty helpful, you can click on this, but we won't bother at this stage. You should now see that under your vendors group, like if you click this home button, it'll bring up this screen that shows your vendors. And on the vendors group, you see that you can record purchase orders. Then you can receive inventory. And once you receive inventory, you can enter bills against the inventory. That's when you get the invoice. And then later on, you can pay the bills. If you notice down the customers, we've allowed it to create a sales order, although we don't expect to use that. But when a customer comes in and buys something, we will create an invoice. Later on we might receive payments. And if we have cash sales, this would be create a sales receipt. But either way, the money will come in and go to record deposits. Later on, we'll learn how to reconcile a bank statement. So I hope this has been a good setup. Let's just quickly, we'll just end there as our setup. You should be able to see in your lists, chart of accounts. These are the accounts. If I maximize that window, these are the accounts that are currently in your QuickBooks company account. And you can minimize that a little bit or just grow it slightly to show you the different accounts that are in there. And as you can see, there are no balances in any of the accounts, and we'll be putting those in. But you do see we do have inventory, which will be important, and most of these other accounts you can see we will wind up using. So we'll stop there. I hope this has been helpful to you, and we'll then move into creating the transactions. Aloha! This is Kevin Kimball, and we'll be moving into transaction 1 in our QuickBooks tutorial. You should have just finished watching the video on how to set up a QuickBooks company using the Easy Step interview. And this screen here is probably what your screen looked like when you finished. If it doesn't look like this, you should open up your QuickBooks company file for Hawaii Straw Hat Company and just click on Home to allow it to look something like this. If you recall, under this video where I talked about tracking the life of a simple business, you learned about Spencer and his business and wanting to raise some money. You learned that he wanted to buy some assets, some inventory, and then sell it to customers. And to get started, he invested $51 of his own money. So what we're going to do now is we will record transaction 1 in QuickBooks where Spencer invests $51 of cash into the business and therefore obtains equity of $51. Let me move this out of the way now. And in this case, it's a pretty simple transaction where we will just go up to banking and use the register. Now in this account, the register that we're using is the bank checking account register for Laie International Bank. So we're going to choose OK. The date of this transaction, if you recall, is 1/1/11. Now it tries to number it because it thinks that I might be recording a check, cash going out, but you'll see that that number 1 will disappear as I go on to the payee. Now the payee in this case is Hawaii Straw Hat Company, HSHC. But as soon as I hit Tab, QuickBooks will recognize that we have not set up a Hawaii Straw Hat Company, which is a name that can be chosen in this register. So if I hit Tab, it's going to say, hey, I don't know that yet. Would you like to add it? You can either do a quick add, where you won't have to put in any additional information other than the name of the company, or you can choose Setup, and we're going to choose Setup in this case. Hawaii Straw Hat Company is actually the company itself, so it's not a vendor, it's not a customer, it's not an employee, so therefore it is other. As you can see, it brought in the name of the company that you're trying to add, and I might as well just Control-C and copy that name and paste it under company name down below. If I hit Tab, I could put in additional information, but at this stage I don't feel that that's necessary, other than maybe we could put in the address, and we could put in up here in the address, I'll hit End, and then hit Enter, 55-220 Kulanui Street. And I hit Tab to go to Laie, Hawaii 96762, and I will hit OK. So we have enough information here for this new name. It's an other name, and I hit OK. All that does is it allows us to indicate who the payee is, and the payee is the company itself. Now it's not a payment, so we need to tab, or you can just simply use your mouse and click over here. And it's $51. The account, you'll notice that there's two things going on here. There's a deposit going into Light International Bank. But then you also have to say, well, where did the money come from? If you recall, we had to note the assets, which is Light International Bank cash going up. But we also have to say, well, how did we get this asset? And the answer is we have equity. So I'm going to choose the drop-down button to indicate the offsetting account, which in this case is Partner 1 Equity. So Partner 1 will be Spencer, and in the memo we'll indicate Spencer's initial capital contribution. Now in this case it's saying, hey, this transaction is more than 30 days in the future, and we realize that because this fictitious company we're setting up is off in 2011. So we're going to see this error a lot of times, and every time it comes up I'm simply going to choose yes, because I understand that it is off in the future and I'm okay with that for this instructional video purposes. Now let's see what should have happened. As you know, we should have had assets go up to $51 and we should have equity up to $51. So we're going to go to Reports, Company and Financial, and we're going to choose Balance Sheet Standard. We need to change the date because we're running it as of 1/1/11 and we want to refresh. And as you can see on 1/1/11 we see that the cash balance is 51 and total assets are 51, and there are no liabilities as you can see, but there is equity of $51. So we have entered this transaction incorrectly, and we can stop with this transaction 1 video. Aloha, this is Kevin Kimball, moving on to transaction number 2 in our simple accounting process in QuickBooks. If you recall from the video in which I went through the accounting for a simple company, transaction number 2 is where HSHC receives a secondary investment. This is where the father puts in $49 into HSHC, receives a certain ownership, and the assets then go up to $100, liabilities are still 0, and equity is $100. So we will strive to record this transaction properly in QuickBooks so that we arrive at the same solution. If this is still up from the prior video, transaction 1, you can close this report, and you don't need to modify, you don't need to save the modifications because we can create that report again. Now since we already happen to be in the register, we can just continue where we're at, but why don't I just close this down just to remind you how to get into the register. You go up to Banking and use Register, or you can just be down here and hit Control R, and then you choose which account that you're going to be receiving funds into, or which will be affected, and we know it's Light International Bank, and so we choose OK. And as you can see, the same screen comes up. Now if you recall from the transaction, this sale occurred on January 2nd. We'll tab through, and it is going into Hawaii Straw Hat Company. Now you notice I only typed in HAW, but the full name appeared, and that's the nice thing of having these names stored in QuickBooks, is so it saves some data input time. If I tab through, I get over to the deposits, where he will deposit $49, and I tab again. Now this one's going to be Partner, and you see there's 1, but this is Partner 2 Equity, and I click on that. And this will be Dad's, we'll call it Spencer's Dad's initial capital contribution. Now the reason you want to put these memos in is because, you know, towards the end of the year, even a couple months or even weeks later, you may forget what this transaction was for. So you want to put in memos to help remind you of that transaction. We do know that this is off in the future. We choose yes. Now let's test to see whether our reports have come out correctly. We go to Reports, Company and Financial. We're going to run the balance sheet, but we need to change the date to be 1/2/11 and click on Refresh. As you can see, we do have $100 in the bank, and that came from our 2 owners, and we balance out. We can stop here and move on to transaction or event number 3. Aloha, this is Kevin Kimball. This is a continuation of the accounting for a simple company. This is transaction number 3, in which HSHC borrows money from the bank. In this case, you'll notice that HSHC borrows $200 from Lightyear International Bank for 1 year at 10% compounding monthly. After this transaction, total assets should be $300 because we brought in $200 of cash, and our liability should be $200, and our equity should be $100. The liability of $200 representing the borrowing of this 1 year loan. The equity is the initial capital contributions from the father and Spencer. Let's see if we can get this transaction recorded here. I'm going to close the report that's on the screen. I don't need to save this report, and I can also close the register. We're going to go up to banking, and we're going to set up the loan first. I want to maximize this a little bit so we can see it a little bit better, see all the options here. And we're going to choose to add a loan. So this is to set up the loan first, and then we'll need to record the loan transaction itself. So we're going to add a loan. The account name in this case, as you can see, we have no account yet set up in QuickBooks to allow for the short-term loan. Now, we could have done that during the initial setup interview, or we can do that now. Since this screen is up, you'll see that these options on the menu are grayed out, so I need to cancel because we're going to step back. Now that I've canceled that, you see these are now black, which means they're available, and we can go to our lists and choose Chart of Accounts. Under the Chart of Accounts, we're going to add a new account, and the new account is going to be a loan, and I'm going to choose Continue. Now the account name, as you can see, this loan is an other current liability, but if you thought it was a long-term liability, maybe it's a 2 or 3 year loan, you would choose long-term liability. But in this case it is other current liability, and so it is short-term. We will call this 1 year loan, and we'll say it's from LIB. We won't make it a sub-account of anything else, and in here we could say this is a 1 year loan at 10% compounded monthly. We could put in the account number and routing number, and also in some cases a tax line mapping might be helpful as you prepare your tax return. Now we can enter an opening balance here if we wanted, but since we're going to record a transaction, to record it, we don't need to do it here, and we're going to save and close. Now we have the account set up, which allows us to choose it in our setting up the add a loan. So we can close Chart of Accounts by clicking the top right X close button there. Choose add a loan, and now we have account name. You know what I need to do? When you add a new account in the Chart of Accounts, you need to actually step out of this Add a Loan Manager. I'm going to hit Cancel because you notice that the new chart name did not appear. I need to close, and then we're going to go right back into it, Banking Loan Manager. And now when I add a loan, you'll see that the account name does appear. There's our 1 year loan. So you just need to step out because as we went into the first time, it referred to the accounts that were already in the Chart of Accounts, and that was why the sales tax payable was the only one that appeared. Now the lender in this case, we would need to add another name. So once again, I realize that this is a little bit of a back and forth. If we kind of thought this through in the setting up of the list during the Easy Step interview, we wouldn't have to do this, but we'll cancel one more time. It's not a big deal, and this is also kind of helpful so you realize how to do this. We need to go up to our lists, and we will choose Other Names List because this lender will be another name, and we'll add other name, and we'll say New, and we'll call it Lightyear International Bank Loan Department. Okay, so we'll kind of be specific this time so that we don't confuse it with our bank account. I copied that and I Control-C'd it in. I won't put in any of this other information. I don't feel it's necessary, and I'm going to choose OK. Now we have our Hawaii International Bank loan department in our other names list, and we can close this. Once again, I'll probably have to get out of Loan Manager and then get back in. Now I believe we have the stuff in here that would allow us to choose our account name, which is the one-year loan, choose our lender, which is Hawaii International Bank. The origination date is 2/1/11, and the original amount is $200. But be careful, don't imagine that as you put this original amount in here that will do the computation, that it will be entering a transaction in your books. That's not what it does. It's more for informational purposes at this stage. The term in this case is 12 months, and we choose next. The due date of the next payment will be 3/1/11. Now the payment amount, we could actually use this what if scenarios in QuickBooks to enter that. I won't choose to do that right now. I'm just going to go into Excel and put in the key information. So I opened up Excel and I'm going to type equals PMT, and the rate is 10%, which I need to divide by 12 months because it's a monthly compounding. Number of periods is 12 periods in a year, and the present value is currently $200. And we'll assume this is an ordinary annuity, and therefore the future value will be 0, and the annuity type is the default. So the payment will be $17.58, so I can close that down. I don't need to save the changes. So in our payment amount, $17.58. Next payment will be number 1. It's paid monthly. We do not have an escrow account. In other words, we don't have to include an additional amount on top of the payment to pay for insurance or things like that. So there is no escrow account. Escrow accounts are very common in home mortgages, where they put your property taxes and your insurances, fire and flood, hurricane insurances, in an escrow account so that they pay it for you. So there is no escrow account. We'll choose next. The interest rate is 10%, so I just hit that and tab. It's paid monthly, as we noted. The payment account. This is the account out of which the money will come. So we choose Hawaii International Bank. This is not the loan account. This is the bank account. So that's why that was helpful to have a different name. The interest expense account, in other words, when interest is charged, we want to have that go into the interest expense account on our income statement. And then we have our bank service charges would go into the bank service charges account, and we choose finish. So now we have a balance. As you can see, the balance is 0 because we haven't gone into the account yet and recorded the cash being received. Now I'm going to show you that what if scenarios just so you can see how that does work. If you borrowed $200 and the origination date was 2/1/11 and the term were 12 months, and the payment amount, I won't put it in right now because you'll see that it computes for you automatically. Interest is 10%, next payment is 3/1/11, then you calculate. You can see it comes up with $17.58 for you, and you could print that out if you wanted to, and we'll just hit OK. If you go to the payment schedule, you won't see a payment schedule yet because we haven't actually received the money in our books. That we've just set up the loans information, but we will have to close this. And now let's receive the cash. We'll go to banking, use the register, OK. The date on this loan when we receive the money is 2/1/11. We'll tab over and we'll say that the payee in this case is Hawaii Straw Hat Company again because it's receiving the money. It is a deposit of $200. Tab over. Now the offsetting account this time will actually be the loan. So we need to go up here and find that loan, which is the one-year loan, and click on that. The memo, we could say one-year loan at 10%. And we can tab and choose yes because we know this is off in the future. It always is helpful when these messages come up to check your dates over here in the register to make sure you do have the correct date. But it is correct and we will choose yes. That beep beep just effectively says that the transaction has been recorded, which means now we can go to our reports, go to our company and financial, choose balance sheet standard, and we're going to run this report as of 2/1/11. If this was done correctly, we should see that our assets are now 300 in cash, which they are. We've got a liability of 200, which they are, and equity of 100. So it looks like we've done this correctly, which means we can now stop and go to number 4. Aloha, this is Kevin Kimball. We are now moving into transaction number 4, in which HSHC creates a purchase order. This is not an accounting transaction where assets, liabilities, or equity are affected, but rather this is kind of a commitment or a request to purchase. We will track this in QuickBooks so that we know what we've ordered, but it will not be in the actual financial statements themselves. In this case, Hawaii Straw Hat Company is going to order actually 100 hats at 50 cents per hat. After this order, the assets, liabilities, and equity will not have changed at all. But we will, as I mentioned, record this purchase order in QuickBooks. So let me move this out of the way so we can start to do that. If you've continued right along with transaction number 3, your screen probably looks very similar to what I have up on my screen. I will close this report, which is a balance sheet after transaction 3, and I do not need to memorize this report. I can close the register because I won't be using that in this particular purchase order. And if you look at this screen, click on Home to make sure you come back and see these options here. But the very first item in this flow of interactions with the vendor is the purchase order itself. And so we're going to go up and click on Purchase Order. The purchase order allows us to buy product, to order product from a vendor, and then track that order as it then gets received later on, as you can see up here. So our vendor. Now, as you recall, we have not set up any vendors yet in the system, and therefore we will need to go and set up a vendor. We can either do it here by typing in China Hat Company, CHC, or we could have gone up to vendors and added a new vendor in the vendor center. But we'll assume that you just want to type it in here. I hit Tab, and we're going to choose Setup. You can see the name of China Hat Company appears. I'm going to Control C, copy that, and go down to company name, Control V, and paste it. I might as well put in a little bit of an address. Let's just say PRC. I won't put in any other details, but just so you can see, you can put the address there. Under additional info, you can see a type here, what type of company this is. Let's choose a supplier because that's what China Hat Company is. You could give it a number, so maybe they have an account number that we're dealing with them on. The terms, sometimes we'll give terms that say, hey, if you'll pay, if we will pay, in this case, since this is a vendor, if we'll pay within 10 days, this vendor will give us 2% off the total amount. We could choose that, so it can compute our purchase discounts for us automatically. If we have a credit limit that we're aware of, we would put that in. Maybe they let us buy up to $50,000, let's say. You would just type that in. There are no other account pre-fills that I need to put in over here. And so I will go ahead and click OK. Now the place to ship to is to Hawaii Straw Hat Company, which is our address over here. The date of this order is 2/5/11, and our purchase order number, let's just assume it's number 1 since Spencer's just starting out, but if it had been a company that's been around for a while, you'd want to put in the next sequential purchase order number because that's a good internal control to help you keep track of all your purchase orders. Now what are we going to buy? Let's go to our item, and as you recall, we haven't set up any inventory items yet, so we'll just call this a straw hat. Now we're going to assume that all of Spencer's straw hats are the same size, and it's just take it or leave it kind of business, But we could be more specific and have a straw hat medium, small, kids, adult sizes, all those things. But we won't choose to do that. But I'm going to hit Tab, and it will move me into the inventory setup screen because it doesn't recognize straw hat in our list of products, which would have been up here. Would you like to add it now? Yes, I would. This is an inventory part, so assume that automatically, and I'm going to choose that. The name of this in my system will be straw hat. If we have the manufacturer's part number on their system, when we call China Hat Company and say, hey, do you have this particular product? They say, well, what's the part number? On their system, we could have that here for reference. On the purchases, we'll say men's straw hat. And then on the sales transaction, maybe we just call it straw hat. What that means is when we buy it from the vendor, this would be what shows up on the purchase order. And when we sell it to a customer, this is what would show up on the sales invoice. The cost in this case we're going to say is 50 cents. Now you'll notice later on that when we receive it we actually have to pay a little bit more, so the landed cost might wind up being higher. In fact, it turns out to be 60 cents. And we'll make that modification as we receive it to pay our bill. The account that's going to be involved is the cost of goods sold. That means when we do sell it, the expense account on the income statement will be cost of goods sold, so that is the correct account here. We'll leave it. The preferred vendor, as you'll notice, now comes up because we have set up China Hat Company. On the sales price, I believe we're going to sell these, let me go and check what that price is going to be. We'll sell these at $2 a piece. Now the tax code, it is a taxable sale, and the income account, meaning the revenue account, would be merchandise sales. So when we sell this, we're going to see our merchandise sales revenue go up $2, and we'll maybe have a receivable for the $2. And we'll have cost of goods sold, our expense, go up, whatever the cost is, and we'll see inventory go down. Down below, we can actually tell the computer when we want to reorder. For example, maybe we always want to keep 100 hats on hand, and so we'd put in something like 100 here. So if ever our inventory drops below 100, we would be notified that we need to buy some more. So maybe in this case we only want our reorder point to be 20. I'm not going to put in any on-hand quantity right now because we don't have any of this new item. But if you were bringing QuickBooks over from another year, from a different system, you might have beginning inventory items and they would have on-hand quantities which you'd put in as a starting point. But I think we've put in enough for this, and so we can choose OK. And we now have straw hats being ordered. The description is men's straw hat, which I guess our supplier China Hat Company will recognize. The quantity to purchase is 100, and you should notice that the total will compute automatically for us here. The rate will be 50 cents per hat. We have not designated a customer that we're buying this for, so I'm not going to add a new customer or anything like that. Now we can save and close. Yes, I do recognize this is off in the future. I just want to make sure the date is correct. 2511. Yes, that's right. And so what's happened now is we've created a purchase order. If you want to go back and see that purchase order, you can click on Purchase Order and choose Previous. And there's that purchase order. Next, this would allow you to enter a new purchase order. So we can close now. That's all we do for number 4. All we've done is create a purchase order, and you notice that if we go to our reports balance sheet, our balance sheet should not have changed at all, even though we did order these $50 of hats. We'll refresh this, and you can see down below we have no impact on the balance sheet as of yet. I'll stop now and we'll move on to transaction 5. Aloha, this is Kevin Kibble. We are now moving into transaction number 5, in which CHC delivers the hats that we ordered on the purchase order created in event number 4. As you can see here, CHC delivers the hats to 10net30. That means that the discounts that they're willing to offer us would be that they'd give us 2% off if we'll pay within 10 days. If we don't, we'd have to pay the full amount in 30 days. So these hats do arrive, but you'll notice that they arrive with a total landed cost of $60. You recall the hats themselves cost 50 cents a piece. We bought 100 of them, and therefore the cost for the hats themselves is $50, but then we had to pay $7 to ship them over and $3 in sales tax. So the full landed cost will be $60, and that full amount will go into inventory, and we will owe $60. We'll then need to spread that $60 of asset inventory over 100 hats. So our landed cost per hat will need to be 60 cents per hat. So let's move this out of the way. And if you've been following along, you'd probably still have this screen up. We'll close down that balance sheet report. I do not need to memorize it. And now we'll go ahead and receive the product. So as you can see, we purchase ordered it, and now we're going to receive. And with the inventory, we do receive the bill, and so we will receive the bill. Sometimes the bill gets sent separately, so you get the box in one place, and then you get the bill somewhere else, but these actually do go together. The vendor, we just click on that and we choose China Hat Company. Now this message says, hey, you've got some purchase orders open for this vendor. Do you want to receive, meaning receive inventory, against one or more of these orders? That's exactly what we want to do, so we're going to choose yes. Now if we had a lot of open purchase orders against which we were receiving, you'd see them all listed down here below. But we only do have one, and so it's pretty easy to find the one that we're receiving on, and so we're going to choose that by clicking on it and click OK. Now the thing that's going to be a little different here is it's automatically assuming that the total amount due is $50, but if you recall, we actually have to pay $60 for this receipt because we had $10 in shipping and sales tax. So what we can do is we can go down here to cost and spread that $60 over the 100 units and change it to 60. Now it's going to ask me, do I want to update the cost per unit in my inventory system, which was 50 cents? And I'm going to say no, because I'll just make this modification whenever we receive. So you've changed the cost. You wanted to update the item with the new cost, the item in inventory, and the answer is no, I don't. I'm just changing it on the bill itself. We'll keep track of that 50 cent per unit cost because that's how we order it from our vendor. Now the reference number up here is invoice number 452. That's the number that China Hat Company billed us on. So we'd actually received an invoice numbered 452. Be careful that you do pay attention to the dates up here. We did receive this on 2/15/11 because those dates will impact whether we get the discount or not. And if you see, I'm going to tab, watch this discount date update. What this says now is that if you pay by February 25th, you will get 2% off this $60. The bill will be due, the full amount will be due 3/17/2011, and we could put a memo in here if we chose to. But I believe we've done everything correctly. If we have done this correctly, we should see an increase in our inventory to $60 and an increase in our accounts payable to $60. So we're going to save and close. If we had a lot of bills to receive, we would choose Save and New, and a new screen would come up. So we'll save and close and choose Yes here. Let's go up and look in the reports. Reports, Company and Financial, Balance Sheet Standard, and we want to run this as of 2/15/11 and refresh. You'll notice our inventory is now 60, our accounts payable is now 60, and all the other accounts did not change. We can now move on to transaction number 6. Aloha, this is Kevin Kimball. We are now moving into transaction number 6, in which Hawaii Straw Hat Company sells 10 hats for $21 on account. What that means is that we are going to sell the hats today, February 17th, but not collect until some later date, which we don't know at this time. We hope they pay soon, but they may not, and we do hope that they pay at least within 30 days. In this situation, what we're going to see happen is we'll see that our assets in receivables go up $21 because that's how much this customer will owe us. Now, why does the customer owe us $21? He owes us $21 because $1 is going to be collected from the customer to send on to the state taxing authority. The other 20 will be an increase in equity because our revenues on our income statement will go up, and those revenues do flow down into net income and thereby increase equity, which belonged to Spencer and his dad. But we'll also see a reduction in assets, such as inventory in particular, of $6 because 10 hats costing $6 will be deducted from inventory, thus reducing inventory assets. Now that reduction of inventory assets needs to come out from somewhere else to balance out, so it's a reduction in equity, because what happens is as we give inventory to customers, our expenses, called cost of goods sold, go up. As expenses go up, net income goes down. If net income goes down, the owner's equity goes down. So that's what's happening here. Is Spencer and Dad's equity goes down $6 by giving up the inventory, but went up $20 by recording revenue. So when everything's said and done, we should be able to look at the income statement and see $14 of net income. And let's see if we can do that. If you still have this screen up from the balance sheet that we just barely ran in transaction 5, you can close it and don't need to memorize it. To make sure you have the screen that I have, hit the home button over here, and we will now make a sale to a customer. Now, a customer did not come in and create a sales order saying, hey, could you order this for me, or I'd like to order this and collect it, get the product later. They actually came and said, hey, I like those 10 hats and I want them now, and so we're going to create them an invoice. This note here from QuickBooks tells us that they have a variety of different forms that make your invoices look very professional. I'm not going to spend time on that now. I'll hit OK. But the particular customer that came in to buy the product is Ali E. Turf Company here on the island of Oahu. And as you recall, we haven't already set up this customer, so when I hit tab, it will recognize that we haven't set the customer up, and so we need to go to the setup. Click on setup. We'll highlight Ali Turf. It's already highlighted, but just in case, Control C and then Control V. Let me try that again. Control C and then Control V to paste it. And we could put in an address. We'll just type down here Mililani, Hawaii, and if I knew the zip code I'd type that in, but I don't right now. And I can hit OK. Additional info. The type, this is just a retail customer. They just walked in and wanted to buy. But sometimes you might choose how they found out about your business, because then you can run reports saying, you know, who did we get sales from, who came in from advertising, who were word-of-mouth referrals, and it just helps you manage your business better as you analyze your customers. The terms, we will give the same discount terms to our customers as we got from China Hat Company. If Ali Turf pays within 10 days, we'll give them a 2% discount on the amount paid. And if not, then we expect the whole amount within 30 days. Now, we don't have a particular sales representative assigned to Ali Turf, but if we did, we would type it in here, and that way they can manage their customer base. Now, we prefer to send the method, preferred send method is mail. Actually, we're going to hand it to them, but we'll just choose mail here. But as you can see, you can choose to email. Sales tax code, this is actually in-state. Now, for those of you who understand Hawaii tax law, we have an excise tax, which actually is treated a little differently than I'm going to show in here. So I'm actually going to treat the state tax as if it's a sales tax, which is a tax on the customer, rather than excise tax, which is tax on the revenues of the business. Please don't worry about that. We'll just assume that Spencer's running his Hawaii Straw Hat Company, maybe from a base in California, where they do have a state sales tax, or a or local sales tax. Anyway, move on to payment info. Nothing. Well, we could set up a credit limit. Maybe we'll only allow him to buy up to $1,000 without any special approvals. His preferred payment method, let's say he's going to pay normally with check. And job info, there is no specific job, where you said, oh, I want you to build these for me, so that doesn't relate, and we can choose OK. So all we did is we just set that up. In my own personal accounting in QuickBooks, I always just do the quick add, and I don't put in a lot of that information because it's not really relevant for me as an individual. But on my date, I need to make sure I put in 2/17/11. The invoice number, let's just assume this is Spencer's very first sale, so he is invoice 1. You do want to put these invoice numbers in sequentially. It helps to provide an audit trail and ensure that you have a completeness, an ability to test the completeness of all your invoices being recorded in the system if you use them sequentially. I'm hitting tab now. There was no PO number because because Elite Turf did not submit a PO, purchase order. Now the quantity, we will sell 10 hats. The item code is, as you can see, straw hat. You'll notice that the price of $2 per hat came in automatically for us. It's kind of nice that that was done for us and even computed for us automatically here. So now what we're going to do is we're going to move on. And the one thing that you'll notice here is that the sales tax did not compute automatically for us. What that tells us is that there's still some information that we need to set up in our system. So we will actually go back and make sure that we put in the standard sales tax rate, which in this case is going to be 5%, so it computes the sales tax for us automatically. So I will now show you how to do that. In order to modify the information for the state sales tax, this is considered an item. Items can be brought into invoices and POs and things like that, and we want to set that up properly. So we go up to our lists and choose item list. If you notice on the item list, I'm going to drag this between name and description over a little bit, there is a state tax. And so I'm going to click on that state tax, and I'm going to go to item and choose to edit that state's tax. As you can see, the state tax is currently shown as 0, but we want this to actually be 5%. So I just typed in 5 and it did that. Now the tax agency that we are collecting for, we have not set up yet. As you can see here, these are my vendors that I already have in my list. I only have China Hat Company, so I need to choose Add New. And this agency, we'll call it we'll call it California Sales Tax Department. So I don't know what the actual name is, but I'm just typing that in. I'll highlight that, Control C, Control V, and bring that down. And once again, you could put an address and all that. But what this is doing for us is it's allowing us to set up a vendor to whom we owe the state sales tax that we'll be collecting from our customer. And we're going to choose, we'll hit additional info to see if there's any information there. They don't give us a discount by paying early, so let's not worry about that. And I'll hit OK. So now it's set up as a state sales tax, 5%. We hit OK. And we can close down the item list, and as you can see, it automatically computed that 5% on the $20, and the total balance due from the customer is $21. So that's kind of nice. If you get those set up properly, you won't have to worry about computing that for yourself. Let's review the information here again. Make sure it's the right customer, the right date, the invoice is correct, the payment terms are correct, the quantity is correct, what's being sold is correct, the price is correct, all the math is done correctly, and so we can now, and the tax is done correctly, and we can choose Save and Close. Choose Yes. Now what should have happened is our income statement should have updated. Let's go to that. Reports, Company and Financial, Profit and Loss Standard, and I want to run an income statement. Let's just run it from the beginning of the year, 1/1/11, to the date of the sale, which is 2/17/11. and refresh. What you should see is that our merchandise sales are $20 and the cost of goods sold is only $6. You'll notice that the merchandise sale is not $21. Now if this were Hawaii, it would be recorded as $21 because we have what's called an excise tax, and then we'd actually have an expense called excise tax because the tax is on the business. But this is, we'll assume this is California, and we're going to set this up as a sales tax, and therefore we record $20 here, which is the revenue of $2 per hat for 10 hats, and then the cost of goods sold, which is the related cost of selling those hats, is 60 cents per each of the 10 hats, $6. Therefore our gross profit is $14. But since we have no other expenses recorded yet, like rent or advertising, then our net income is $14 as well. So it looks like this has been done correctly. Let's go over and look at our balance sheet now. Company and financial, balance sheet standard, and we want to run this as of 2/17/11. Now before I hit refresh, you should recall that our inventory should have decreased by 6 and our accounts receivable should have increased by 21. So here's our 21 increase in receivables. Inventory is now only 54, whereas it was 60 before. And if you want to see that, you can just double click on this asset and it brings up this where it shows that we did have 60 and then we credited the account. If you know your accounting terms, debits and credits, we had a debit of 60, then we credited it 6, and now the new balance is 54. And you can do the same for any of these accounts by double clicking on it. Our sales tax payable is now $1, so that shows that we owe it. So the balancing out of this side, net increase of 15 is being offset by an increase of 1 here and one in sales tax and an increase in net income of 14. So it does offset and we are still in balance. Now we can move on to transaction number 7. Aloha, this is Kevin Kimball. We are moving into transaction number 7 in my accounting for a simple company QuickBooks tutorial. In transaction number 7, what we did is we had HSC write a check to pay China Hat Company for the 100 hats it purchased on 2/15/11. This check will be check number 1 and it will pay off the $60 invoice. By writing this check, HSC will reduce its assets, cash, 60, and reduce its liability, account payable, 60. Let's go ahead and make that payment. If you've been following along, you probably still have your balance sheet up from the last transaction number 6, so you can close that and you don't need to save it. And we can close the profit and loss as well. In this case, if you look at the flow chart here, we purchased, we received, we entered the bill, and now we want to pay the bill. And therefore we click on Pay Bills. Now you'll notice what will come up. Right now we're clicking on, we're showing Show All Bills. So it doesn't matter whether the bill is due or not, it will list here. And if you had a lot of bills, they would all list out here. And it could be hundreds long. Now watch out, because if you ever open it up and your bills don't show up that you think you should see, it may be that you have due on or before a certain date. And what this is saying is all bills that are due before February 27th will appear in the list. If you recall, China Hat Company was giving us 30 days to pay, and so it's not actually due until March sometime. And that's why it's not showing up in the list here. So if you ever come to this and the bills aren't showing up, don't panic, just choose Show All Bills and it will appear. So it's not really due until the 17th of March, as you can see here. But this is the bill that we do want to pay, and so we just choose it. Now if there were multiple bills from China Hat Company, you could click on multiple bills and pay them all at once. Now if you look down below, it's looking at whether you get the discount or not. So the computed discount would be $1.20 if we paid within the appropriate time frame. Right now it's assuming that you're paying on February 17th, and therefore you would meet the discount terms and you would get that discount, but in the actual case itself, we aren't paying until 2/27/11. So as I hit tab, you should see this discount disappear, which it does. So therefore, we really do have to pay the full $60 because we're not being very kind and paying within the discount. And therefore, they're not giving us a $1.20 off on the amount that we owe. Now in this case, we don't want to use QuickBooks to print the check for us. We want to write out the check by hand and then just assign the check in QuickBooks itself. We will pay with a check. The account out of which the money is coming is Hawaii International Bank. If you had multiple bank accounts, you'd have to choose which one the check is coming out of. And now we can choose to pay selected bills. I think we've got our date right, so that's correct, and the amount that to pay is 60 is correct, and so we can pay selected bills. Now it's asking us which check number do we want to assign to it. We want to assign check number 1, but once again, if you'd been using a checkbook for a period of time, maybe it'd be check number 2022, which is the next one, and you just type that in. The date is correct, and now we can choose OK. Yes. Now it's asking us, do you want to pay more bills? If you did, you just click on it and it would bring you back to the pay bills screen, but it's not. We don't have any more to pay, so we choose done. Now let's see if it updated our balance sheet and income statement correctly. As you recall, the income statement should not be affected at all when we make this payment because we will record expenses and revenues as we earn them, as we earn the revenues, or as we incur the expense, not when the cash actually flows. We are following what's called accrual basis accounting in my tutorial here. So let's go and look at the income statement, but you see there shouldn't be any change in the results that we already had. 1/1/11 is the beginning date, and the ending date is now 2/27/11, on which we paid $60. But as you can see here, there is no change in the income statement because the $60 was to buy the inventory, most of which is still sitting in inventory. Only $6 was removed from inventory and recorded as an expense, and that occurred when we actually made the sale to the customer of Elite Turf. So let's go back and run the balance sheet though. The balance sheet should show a change. Balance sheet standard, and we're going to run this as of February 27th, 2011, and click on refresh. And you should see now that our cash balance decreased from $300 down to $240. Just so you can see what's happening, and you want to see it in debit and credit terms, just double click, or just double click on the account itself, and you see we did have $300, which is a debit balance because cash is a debit, and then we credited $60, and therefore our new balance, which is a debit according to accounting terms, of $240. So if you've taken Accounting 201, these debits and credits should make sense. If not, no worries. As long as you can see that cash did decrease, you'll learn about that later in your financial accounting course. Now you should also see that there is no account payable any longer because it's been fully paid off. And that's exactly what we expected to happen. And so we can move on and on to number 8. Aloha, this is Kevin Kimball. We are now continuing with transaction number 8 in my Accounting for a Simple Company in QuickBooks. In transaction number 8, as you can see here, Hawaii Straw Hat Company receives a check from Elite Turf for $21. The check number on Elite Turf's check is 3453. As you can see, liabilities and equity will not be affected by this transaction because it's simply a payment of an amount that was already receivable in the past. So what's going to happen is our cash will go up 21, but our accounts receivable will go down 21. So all that happens is assets go up and down by the same amount. Liabilities and equity are not affected. Let's go ahead and receive the cash then. If you've been following along, if you've just finished transaction number 7, you might still have this balance sheet up, so you can close it down and not save it. Close the profit and loss account, not save it. And if you look up here, you should see a customers area. And in the customers area, you see that we created an invoice, and now we can receive payment. Before you receive payment, we recommend completing the payment methods interview. Why not? Let's go ahead and do that. Would you like to do it now? Yes. Just in case we miss something. Your answers will help optimize QuickBooks for accepting payments. So how do we receive payments? We receive checks and we receive cash, and these others we're not going to accept, and submit answers. This is where QuickBooks tries to sell you something, and I'm not going to worry about that right now, so close it. Move back to customer payment. We are going to receive this from Elite Turf, and watch what happens down below here as we choose Elite Turf. What it does is brings in all the amounts owing from Elite Turf. This is effectively a listing of the accounts receivable balances from Elite Turf. Now the amount that we're going to receive from Elite Turf is the full $21. In fact, what we could do is we can just click on this, saying that's what we're receiving, and it brings in the 21 for you. Now if you don't enter an amount, like I did, I left it blank. If I don't enter an amount, QuickBooks will assume that they paid in full. They paid the full 21. Now if they only made a partial payment, maybe they only paid $5 because they can't pay the full 21 right now, you would have to type $5 in here and receive against this particular receivable. So would you like QuickBooks to continue to calculate payment amounts? Yes, I would. Because usually my customers, Spencer's customers, do pay in full. Need to be careful that you change the date. This does come in on 2/28/11. And as you can see, Spencer, the Elite Turf, did not pay within the discount period, and therefore we will not apply the credits for paying early. It is a check, and it is check number 3453. I don't need to type in any memo. I think we've got our date right. It's the correct amount. There is no discount applied, and so I think we've done this one correctly, so we can choose Save and Close. Yes. Let's see if it handled that correctly on the income statement. Now once again, we already recorded the revenue for the sale, so nothing should change on the income statement. I'm going to run this for the whole time up through from January 1st, 11 all the way up to 2/28/11. And the $20 sales revenue, which was there before, is still there before. Nothing has changed. The fact that the cash has come in did not change this. All it's doing, it's simply an impact on the balance sheet. So let's go up to Reports and show the balance sheet impact. Company and Financial Balance Sheet Standard, and we want to run this for 2/28/11. Remember, balance sheet is as of a point in time. It's saying what do you have right now and where did you get it. So right now we have $240. Let's see if we double click on Light International Bank. What you see here is that we don't see the $21 in, and that brings up a very important point. If you look down a little bit further, you see what we have what's called undeposited funds. This is a little unique. You might have thought that the money went right into Light International Bank, but if you really think about how it probably happened, the customer came in, gave a check for $21, and that check is sitting in the cash register. It is not yet at Light International Bank, so we actually have to go into QuickBooks and tell QuickBooks that we're depositing these funds into the bank. And that's what we'll do next. But you can see that this cash, which is undeposited funds, has been received. It's another current asset. It's not cash at the bank. And you can also see that we no longer have the receivable from Elite Turf. So we just changed one asset for another. So we're going to close this down, not save it, close the P&L, not save it, and as you can see, if you follow this receive payments, it goes to record deposits. So now we actually need to record the deposit. You see that we only have one account, one undeposited fund. We click on that because we want to deposit it into the bank. Choose OK, and you can see it's saying, well, what account do you want to deposit it into? If you had multiple checking accounts, you'd have to choose which one, but since we only have one, we're going to deposit into Light International Bank. And it's going to come from undeposited funds. So this is actually similar to what happened on this transaction over here. What we're going to see is undeposited funds will go down 21, and cash at Light International Bank will go up 21. So the impact is effectively the same. We're just moving it from one asset to another. And we're not going to go to the bank and ask for cash back. Sometimes people will make a deposit and say, but I want $30 back cash so they can spend it somehow. We're not going to do that. So we'll leave it as is and choose Save and Close. Yes. Now we can go to our banking, our reports, company and financial, balance sheet standard, and we're going to run it as of 2/28/11 and refresh. You see now we no longer have undeposited funds. Why? Because they're now sitting in Laie International Bank. Let's double click on that. We can see we had $240 of cash before. We debited the account, which is an increase to cash, and therefore $261. We can close that. So now we're done with transaction number 8, and we'll move on to number 9. Aloha, my name is Kevin Kimball, and now we're moving into transaction and event number 9 in our accounting for a simple company. In this case, we actually receive a bank statement from Laie International Bank on February 28th. On this bank statement, they tell us that our cash balance is $301, and they also tell us that we received $1 of interest. Now we didn't know that before. If you recall, we haven't recorded $1 of interest yet, and so we will need to record that as part of our reconciliation. They tell us that the check number 1, which we used to pay off China Hat Company, has not yet cleared the bank. So in other words, China Hat Company has not deposited and has not made its way back to clearing through our account. So Laie International Bank doesn't even know that we wrote that check, and that'll be a reconciling difference. Now the deposit from Ali'i Turf was made but not received by the bank until after February 28th. So that'll be an important aspect. That'll be a deposit in transit is what we'll call that. And then we'll need to reconcile the bank statement with this information. So let's move on. Move this out of the way. And we can close this screen from this report that we just ran. And we go to Banking, Reconcile. Now the account we want to reconcile is Laie International Bank. The bank statement date is 2/28/11, and the ending balance, the beginning balance was 0, because we're reconciling this effectively for 2 months, and the beginning was 0 on January 1st, and the ending balance is 301. The service charge in this case, there's none. Maybe we kept a minimum balance in the account, or maybe it's a free checking. There are no service charges. But we did earn some interest, and so we're going to record $1 of interest. And this will create an entry in the books that increases cash and increases interest income. This date will say we earned it on February 28th, and the account that should go into is interest income. If you recall, we added interest income as we set up our chart of accounts. So let's go up and see if we can find that. There's interest income. Now if you didn't add that interest income in the chart of accounts during the initial setup, you would need to do that now. And we can choose Continue and Yes. Now we learned that this check that we wrote has not cleared the bank, so we will not click here to say it's cleared yet. Move over here to our deposits, and we show that we'll assume that the initial owner contributions came in, and also that the loan came in, but that the deposit of $21 from Ali'i Turf did not. And if you notice, let me just take these off. Watch this difference down here. As I say that Spencer's deposit cleared, the difference decreases. As Dad's deposit clears, it decreases. As the $200 loan deposit was cleared, it decreases. And if you can see, based on the fact that the check is not cleared from China Hat Company, or to China Hat Company, and the deposit has not cleared from Ali'i Turf, these two reconciling differences explain why the cash per books in QuickBooks is different than what the bank says it is, which is 301. Recall, we actually showed a larger balance in QuickBooks for cash than what the bank says we had, and we choose reconcile now because it reconciled. There was no difference remaining. So it's going to think a little bit as it clears those items, make sure the reports are built that help us show that we reconciled properly. Normally I print this for my own personal records, but in this case we just need to display it. We'll say OK. So what you should see on this reconciliation summary is that the cleared balance is 301. That's what the bank believes your cash balance to be. Now if you took the bank's balance and you adjusted it for the checks that you wrote but the bank doesn't know about, so therefore reduce the amount, and you adjust it for the deposits that you know the bank should have shortly but it doesn't have yet, so add it, you would come to the balance per your books. And that's how that reconciliation summary works. Go to the reconciliation detail. This provides a little more detail of effectively the same thing. The last thing I'd like to bring up is in relation to the loan interest. If you've already taken Accounting 201, you would realize that since the loan was taken out on February 1st, that we would actually have incurred interest and would have need to accrue interest for the month of February in our February income statement. Let me close this reconciliation report here. We'd go up to our reports onto the company and financial profit and loss standard, change the date to be 1109, sorry 1111 to 2/28/11 and refresh. And what you see here is there is no interest expense. We have the $1 interest income that we earned, but no interest expense on the loan. And so therefore we would need to record interest expense on the income statement of whatever the 10% on $200 for 1 month was. That would be accrued as an interest expense, and then you would also have an interest payable for that same amount, and that would go on to the balance sheet. So if I close this down, I don't need to save it. I would go to the balance sheet, company and financial, balance sheet standard, and run this as of 2/28/11. And what you would see is you'd see an interest payable here for the amount of interest for 1 month, and then you'd also see that net income would have been a little bit smaller, representing the interest expense. So you'd have a liability going up and net income, or effectively retained earnings, going down for that same amount, and that's why this would stay in balance, one up and one down here in the balance sheet. So hopefully you've caught all this, and that this has been helpful to you as you've learned how to use just the most fundamental things in QuickBooks. As you can imagine, there's a whole lot more that you can learn, but with the limited time we have in this class, this is where we will have to end. Aloha.